We are now in the final quarter of 2025, and if you are a property investor looking at buying an investment property in regional Queensland, then this video is for you because today I'm going to jump in and dissect the 6 regional hubs across Queensland and diagnose exactly what is happening in their marketplaces right now. So again, if you are looking to potentially get into the marketplace before the end of the year, I think you're going to get some tremendous insight as to what's going to be covered today. So we're going to deep dive into Bundaberg, Gladstone, Rockhampton, Mackay, Townsville, and Cairns to see if there is still an opportunity for you to capitalize in one of these regional hubs in the remaining months of this year. Let's dive in. Okay, before we dive in, let me just quickly introduce myself. My name is Troyson Bassini. I am the owner and head of research of Life Buyers Agency and Life Buyers Agency. We work on the ground as buyers agency in regional Queensland, and we operate under these 2 brands. In central Queensland, we operate under the brand Capricorn Life Buyers Agency, servicing Bundaberg, Rockhampton, Gladstone, Mackay region. And in North Queensland, we operate under the umbrella of Tropical Life Buyers Agency, servicing Cairns, Townsville, and the surrounding region. So essentially, our service model is we provide the boots on ground service and perspective. And yeah, we work with a lot of property investors and home buyers looking at buying property in this area. And the reason why I'm telling you who I am today is because, number one, we're very abreast of what's going on in these marketplaces. We buy a lot of property in all of these markets, so very familiar with sort of what's going on there right now. And alternatively, if you are a potential investor or home buyer wanting to buy in these markets but is having some difficulty in trying to buy, I'm more than happy to potentially see if we might be able to help you. We get access to sort of pre and off market properties. We get access to a lot of really good distressed sales where we can buy stuff in isolation of competition, and even under market value. We can help you sort of narrow in on the best suburbs and where you can get the best bang for buck, and potentially get you into these markets sooner so you can start to either set up your family home or get your money into the marketplace to start making money as an investment. So you can reach us on that number there or visit us on one of those websites if you are looking to buy in any of these prospective markets. Now, the format for today will be, I'm going to jump in and dissect each of these various regional hubs, starting off today with Bundaberg. But the format basically is we're going to have a look at the median house price and how that's tracked year to date so far to get a gauge on how prices are moving in that particular location. We're going to then look at the demand and supply side data, how fast things are selling, which gives us an indication on demand. And we're going to look at stock levels around supply, and we're trying to establish what those fundamentals look like. And then we're going to turn our attention to the rental market to get a gauge on how the rental market is trending from a median rent perspective, as well as vacancy rates. And then we're going to sort of form a high level diagnosis of that marketplace by looking at all of these various data points. Obviously, this is more looking at the market more at a macro level. I do still believe that before you go in and invest in these markets, continue to conduct your due diligence. But for now, we're looking at some really good fundamental data, and I think there's still enough insight here to really give you some clues and some cues as to what you should and shouldn't be doing, or where you should and should not be buying. So let's jump in, starting with Bundaberg. So Bundaberg, we can see here, currently it has a median house price of $682,000. Now, Bundaberg, a big regional hub, 4 hours as the crow flies from Brisbane, well located, a lot of investment into the area, a lot of population movement. It's been a really big beneficiary post-COVID, with a lot of people for moving in for lifestyle, and we've actually seen a big contingency come out of Sunshine Coast and the Gold Coast, moving up along the Bundaberg coastline in places like Bargara and Ennis Park. So I'm not surprised to see that, that median house price is around that 600, 700 mark right now, where in only a short few years ago it was sitting around that 400 mark. So we've seen a lot of growth happen in this marketplace over the last few years, but there's been a lot of reasons why that's been the case. Now, a lot of people are coming here today to get a grips on whether or not they're late to the party in a market like Bundaberg. Let me tell you this now, I don't think you are, because if we look at the median house price I still think it's an affordable median, sitting at 682,000. A big regional hub like Bundaberg, I think, has the potential to push up into the 800s in the next couple of years, very similar to what we're probably seeing in markets like Cairns. Right now, I think Bundaberg is 1 or 2 years behind. So I think the median, regardless of what it's done over the last couple of years, is still very much affordable. So we can see here that the median house price has grown in terms of year to date. So from January to now, roughly by 7.7%, from 633 to now what it is at 682. So roughly around sort of $49,000-$50,000. So yeah, it's a median house price still on the rise here. So if you are looking at a market like Bundaberg, based on the year-to-date data, prices are not slowing down, going backwards or retracting. They're still on the rise here. And if you actually look at some of the demand and supply side data for this market, we can see here that days on market is currently down by a few days when compared to January 2025, roughly 15 days. So in January 2025, the average days on market was sitting at 55 days, and now it's down to 40 days. So that actually shows me that there's been an increase in demand, meaning that properties are actually taking longer, a lot faster to sell in Bundaberg than what they were in January. So from a demand perspective, we're seeing all the right ingredients here potentially for a market to still be ripe for the pickings. We can see here that stock levels are currently sitting at 0.3% and inventory levels sitting at 4 weeks. So stock levels sitting up under 1%, that is a really good thing. Any market really with stock levels sitting under 3% is a good market, but markets that are sitting under 1%, you're in a very low supply environment. And when inventory levels are sitting at 4 weeks, basically that means that in a 4-week window or 4-week time frame, all the properties could be sold based on the velocity of listings, and then based on the demand side of the market will be cleared out in 4 weeks. So that's basically all the inventory levels speak to. And for inventory levels to sit at 4 weeks, that is crazy low. Usually a healthy market is around 3 months, but 4 weeks to 1 month is a very low supply environment. So again, we sort of have fundamental data here that's telling me that demand is high and supply is low, and that's the right ingredients you want for ongoing capital growth. And if we actually look at the listing volume, we actually can see here that the market's been averaging around 160 properties per month and sort of very similar numbers. So we actually haven't seen supply contract. In fact, we've actually seen supply kind of plateau or remain the same as what it was in January, but we've seen an uptick in demand. So that's very interesting. So that in itself, with sort of supply levels remaining same and demand increasing, you're going to create that further imbalance between the two, and obviously that's going to put upward pressure on house prices, and I think that's why we're continuing to see this median house price grow throughout the year. And if you look at like the first home buyer incentive kicking in as well this month, that's going to bring additional competition to the market. In regional Queensland, the eligibility is up to 700,000, so it sits right around this median, and there's still a lot of affordable properties in Bundaberg under that $700,000 price point. So markets like Bundaberg, I think, are going to get a rocket put into them based on like this new government initiative rolling out this month. So yeah, I do believe this median house price still has a lot of wiggle room to keep going up. We can see here that rents have increased as well, sort of year to date by 7.2% from $513 per week to now $550. So rents are certainly on the rise in a market like this, and still an affordable rental market. I think rents can easily push up to $650 in sort of the next 12 to 18 months. We can see here that the vacancy rate is sitting at 0.2 as well. So things are very tight from a vacancy rate perspective, and that vacancy rate hasn't changed since January. So it's remained under 1%, closer to 0%. It has sort of over the last 10 months. So we've seen crazy vacancy rate numbers here, and obviously that is also playing a role in putting upward pressure on median rents as well. So rents are going up, median house prices are going up, supply is low, demand is high. So basically what I'm seeing here is a market still rising in terms of my diagnosis, and demand has only increased throughout the year. And the supply levels that we've seen have remained constant, and it's actually then providing still the optimum environment for ongoing capital growth for the rest of this year and beyond. And as vacancy rates remain low, this will continue to put upward pressure on house prices. So my diagnosis for Bundaberg is a positive one, but again, if you are looking to buy in a market like Bundaberg, just be sure to go in and do your own individual due diligence as well. Okay, diving into the next market, which is Gladstone, starting off with the median house price. So that's currently sitting at $709,000, which is actually doing all right in comparison to Bundaberg, given that Gladstone is a little bit smaller in terms of size. But what you'll actually find with markets like Gladstone is that a lot of the employed or the population there has higher disposable incomes in Gladstone, and what we find there is that additional liquidity in cash allows for people to borrow more money, and that actually then, as a result, also inflates the residential property market there. And that's just by and large because some of the sectors that are associated with Gladstone, mining, construction, clean energy, etc., they have a lot of high disposable incomes, and that definitely spills over into the property market. So we can see here that year to date, the median, like despite it sitting at 709, it's still growing up, and it's gone up so far this year by 10.6%. So it's in double-digit growth from 641 to now 709. So the best part of $68,000. So it would have been nice to invest at the start of this year or on the back end of last year. Would have made some pretty good gains there, but the promising sign is that, like, despite that median being what it is, it's a market that's still on the rise. And as I said, like, the median might not look affordable for the size that Gladstone is, but as I said, there's a lot of people in that market that are cashed up that have, you know, the ability to keep pushing up this median based on their borrowing capacity because they have higher disposable incomes there. I would say Gladstone, along with markets like Mackay and places like Weipa, Mount Isa, have sort of the highest disposable incomes per capita if we sort of look at things across the board there. But yeah, median's definitely going up. And look, if you are someone looking at getting into Gladstone, like, you're probably not late to the party. Yes, it has done some good numbers over the last couple of years, but you're still seeing promising signs here that median is still rising. We can see here that days on market from a demand perspective, sitting at 45 days, and it's actually down 10 days from 55 at the start of this year. So we've seen an increase in demand over the sort of the course of this year, which is a good sign. We've seen the market in terms of stock levels sitting at 0.4%, so well and truly under 1%. So supply looks very low here, and inventory sitting at 1 month. So very similar supply data to Bundaberg, and very similar demand data to Bundaberg as well. So supply and demand looking very similar, where we've seen an increase in demand and sort of consistency of supply levels being low throughout the year in Gladstone. So the right ingredients there fundamentally, I think, for upward pressure on house prices, and I think that's why it's done that 10.6, because of that stronger demand throughout the year and that consistently low supply environment. And then if we look at the listing volume, it's looking at about 100 properties per month, and similar to what I said before, it's just maintained that throughout the year, but each month we've seen an increase in demand pick up. So the right ingredients are there still for growth, but obviously you want to go in and do your individual research on individual suburbs, because you can still get into Gladstone with the best part of a $450,000 budget up to $1 million. So there's a lot of elasticity in the suburbs in terms of their median house prices. So just go in and make sure you do individual research on those as well. But the fundamental data looks very good for ongoing capital growth. We can see here that the rental market right now is currently at $520 per week, and that's up from $480 per week. So we've seen a 8.3% increase since January. So rents are on the rise here, and if we look at the vacancy rates, we can see that, very low vacancy rate as well, well and truly under 1%, sitting at 0.3, and that's actually down as well. So 20 less listings from January this year when compared to the point in time data right now. So vacancy rates are low. That's obviously then putting upward pressure on rents. And then when it comes to the median house price, we've got low supply and increasing demand. That's putting upward pressure on house prices. So all the right ingredients here for a market like Gladstone. Positive signs. You're not too late to the party. And as I said, individual suburbs are all on their own growth path or on different trajectories and different times of the cycle. So just make sure you go in and look at individual suburbs as well, because you can get in for as low as $450 and up to $1 million or more if you're buying in Gladstone. But overall, my diagnosis for Gladstone is that the market is still on the rise. Supply levels have tightened with demand heating up, and the market still has the optimal ingredients for ongoing capital growth for the rest of this year and beyond. And then with the rental market remaining tight, it will continue to push up rents as well. So Gladstone looking good for me, guys. Okay, moving on to Rockhampton, starting off with its median house price. So it's currently sitting at $596,000, so $100,000 cheaper than Gladstone, which is its southern neighbour, 1 hour from Rockhampton as a crow flies, and then the best part of sort of $80,000, $90,000 cheaper than Bundaberg. But if you actually look at the size of Rockhampton, it's actually a lot bigger hub than both of those two markets. So I think in comparison to those two markets, it's actually underperforming. So I anticipate this median to keep going just to sort of catch up to those other markets, given that it's a bigger economy, bigger population, and is more of a backbone to central Queensland than those other markets. So very interesting there to see that median, but the good thing is that's still an affordable median. So for you as an investor, you can potentially still get in while this median is still affordable and capitalize on that upside as Rockhampton catches up to those other markets I just mentioned. So we can see here that so far this year, the median house price has grown by 11.4%, so double-digit growth again this year for Rockhampton, and it's actually come off the base of $535 to now what it is, $596. So the best part of $61,000 as an increase this year. So Rocky, a market on the rise here still, guys. Growth is still prominent in this marketplace. If we look at the demand side of the market, we can see here that 34 days on market, currently down by 7 days from 41 compared to January 2025. So we've seen an increase in demand. This appears to be the trend. If we look across like the last three markets we've just dissected, demand has steadily increased throughout the course of this year as days on market has gotten lower and lower. So that just means that things are selling faster and faster, which means that is as a result of that increase in demand. But 34 days, that is a hot market as well, guys. Things are selling basically within the first 7 days of going to market. So that's a tip there for anyone trying to buy in a market like Rockhampton. If you're contesting with stuff that is going to market, most likely it's going to be subject to multiple offers, and you probably have to, in most cases, go over and above that list price in order to be successful, because there'll be a raft of competition there. Also, we can see here that supply levels are very tight as well, 0.3%, and inventory sitting at 6 weeks. So supply all round is low, and then demand is high as well. And similar to what I mentioned about Bundaberg, Rockhampton also is going to be a great beneficiary of that first home buyer initiative, that 5% deposit scheme. Like with this median sitting under 600,000, there's a lot of wiggle room there, particularly for those with that $700,000 borrowing capacity, which is the cap for regional Queensland to operate in this market. So I'm anticipating a lot of activity or a lot of price movement between that $600,000 to $700,000 price point, or that $500,000 to that $700,000 price point. So the sooner you can get into those price points, the better if you are operating in that budget or that zone of the market, because things are going to move very quickly there and prices are going to definitely rise. So we can see here that the median rents are currently at $505 per week, and it's actually up from $485. So a total of 4.1% growth since January. So rents are rising, prices are rising. And if we look at the vacancy rates, that's sitting at 0.2%. So roughly 100 listings per month, and that's been similar to the numbers we've seen in January as well. So we've seen a low vacancy rate environment for the most of this year as well, and that's continuing to put upward pressure on rents, and that's why we've seen that rent grow the way it has. But those rents, if you look at that current median at 105. Obviously, if you go in and do your individual research, you'll find that most suburbs are potentially returning more than that. Like I just bought a 3-bedroom townhouse this week in Rocky for an investor client, and that's renting for $550 per week, and that's a townhouse, not even a freestanding dwelling, and that was in the suburb of Norman Gardens. So I can imagine houses in Norman Gardens are going for like upwards of $550 to $600, if not more, for the more higher end boutique stock. So just be mindful of that. That median rent isn't a true reflection of some of the other suburbs and the potential rental return you can get in the marketplace there as well. But overall, the diagnosis is that the median is still rising. It's not slowing down, plateauing. It's on the rise and it's done double-digit growth, so it's doing really well. And demand has gotten stronger, and that seems to be the trend across the 3 marketplaces we've looked at. And we've just seen that sort of a constant around supply levels remaining the way they have throughout the year. So we haven't actually seen an increase in supply in any of those markets we've looked at. And those are sort of the right ingredients you want to see for ongoing capital growth. So, yep, all good. I think the right ingredients are there. And then rents, I think, are likely to keep rising in this market too if we look at that vacancy rate remaining the way it has. And look, I haven't seen too much happening in the supply pipeline around Rockhampton in terms of new development. I know that's very slow, and I think there are some supply in the pipeline on the northern corridor of Rockhampton and the new parts of Gracemere, but I can't see that hitting the market, for another sort of 12 to 18 months. And is that going to make a dent in supply? I think not, because I think we're going to see an influx of demand come from these first home buyers and continue to drive up this median in the short term. Now, turning our attention to Mackay, starting off with its median house price sitting at $714,000. So definitely the most expensive market out of the ones covered so far. $100,000 more expensive than Rocky. Very similar to Gladstone, sort of, $10,000, $15,000 more expensive than Gladstone. And then we're looking sort of, 15,000, 20,000 more expensive than Bundaberg. And look, I'm not surprised Mackay is the most expensive out of the ones covered off on today. Really, it's the biggest. When compared to those other markets, it's 150 to 200,000 people, a lot bigger population base, a lot more economic turnover, a bigger contribution to net GDP in Queensland. So I'm not surprised that the market is a lot more expensive, and it's probably a good thing as well, because a big market like Mackay should be a lot more expensive than its smaller neighbours, I believe. But similar to a market like Gladstone, Mackay is very similar as well in terms of it has a lot of people there on high disposable incomes that give them a lot of elasticity to sort of keep pushing up prices because their disposable incomes are solid, and that allows them to have higher borrowing capacities, and that allows them to continue to buy property. And sitting at $714,000, I still think that's a rather affordable median for the demographic makeup of Mackay, particularly those on the higher disposable income end. Plenty of wiggle room, I think, to keep growing, in my view. But we can see here that the year-to-date median has grown by 9.5% from 652 to now 714. That works out to be roughly $62,000. So the median is still rising, guys. So don't be scared of getting into Mackay. It's a market still on the move. You can see here that the days on market numbers, it's sitting at 38 right now, and it's trended down from 40 days in January 2025. So really the numbers aren't too dissimilar there. So demand, I would say, there for the most part has virtually remained constant or very similar to what they were at the start of the year. And that's a good thing. You don't want to see a slowdown in demand or that day on market number rising. You want to see it continuing to get lower and lower, which is a reflection of stronger demand. So we can hear that the stock on market numbers are sitting at 0.3, and that hasn't changed also since January. So very low supply environment here in terms of stock levels as well. And look, that just seems to be the trend across regional Queensland so far, where stock unfortunately just hasn't had the ability to go up in percentage in the form of listings per month and also the inventory pool, because they've been met by an overpowering amount of demand, and that's enabled them to stay low on the supply front. So, look, all the right ingredients are in place here for me. If I was an investor looking at the fundamental data, supply is low, and that's remained low for the best part of this year, as well as demand that has remained strong for the best part of this year as well. And that's why this year has done 9.5%. And in a market where there is, I believe, a lot of wiggle room in that median to keep rising as well. If we looked at the rents are currently sitting at $613 per week, and that's up also from 583, so roughly 5.1% growth this year. And again, similar to what I mentioned about Rocky, there are a lot of suburbs within Mackay that are returning some fantastic rental numbers. So be sure to go in and do your own individual due diligence there, because there are many suburbs that are outperforming that median, where you could get upwards of $700 per week rental return. So just be mindful of that. And we can see here that the vacancy rates are very, very low as well, 0.2%, and it's sat under 1% since January, and that's obviously impacted that median rent as well. So look, the trend appears to be, across the board in the regional Queensland property market. Mackay is no different, where the market is still hot. Like, it is still pushing along. Median house prices are still rising, and it's going close to doing double-digit growth in Mackay this year. Strong fundamentals are still in place with low supply levels and strong demand levels, and that's going to continue to put upward pressure on those house prices. And then when you have sort of an ongoing low vacancy rate environment as well, that puts upward pressure on rents. And when you have a grim supply pipeline, then demand will just continue to eat away at that supply and create that imbalance and just keep putting upward pressure on rents and house prices. So look, Mackay is looking good. Again, on a case-by-case basis, go in and do your individual research, but Mackay, I think, has a lot of upside for the rest of this year and beyond. Moving on from Central Queensland, now we're up in North Queensland looking at Townsville. So we can see here that the Townsville median house price currently sits at $677,000, so just shy of $700,000. I'm actually surprised that Townsville is a lot cheaper than Mackay. I would love to see a world where Townsville overtakes it, which I think it will in the next 12 to 18 months, and sort of establish itself as the top dog for regional Queensland, because again, Townsville is the biggest regional hub outside of southeast Queensland. So it deserves its rightful place, I believe. So if you look at that, Townsville is the best part of $100,000 more than Rocky. You're looking at sort of $30,000-$40,000 less than Mackay. A lot cheaper than Gladstone, again, by another sort of 20,000-30,000, and then Bundaberg, not too dissimilar to Bundaberg and what we've seen in Bundaberg. So Townsville, I think that's a very affordable median. As I said before, I think it, as the top dog, should reclaim its rightful place, and I think this median should be really, in retrospect, around that $800,000 mark, and I think it'll get to that in sort of the next 12 to 18 months. So we can see here that the year-to-date median house price is on the up, and it's actually down 11.6%, so double-digit this year, from $598 to now what it is at $677, so a total of $79,000. So for those who think that the ship has sailed in Townsville, or they're late to the party, or they've missed their opportunity, look, that doesn't appear to be the case. The market looks to still be rising here, and I think it has still a lot of wiggle room. And similar to what I mentioned about Rocky and some of these other areas, Townsville also has a lot of price elasticity amongst the marketplace. So you can still get into Townsville with about sort of $550 and get into the marketplace, and then you can still buy relatively what I would call blue chip or semi blue chip property between sort of between 600 and 700,000 as well. So a good market where I think there is plenty value for money, and I've been very bullish in Townsville between that 600 and $700,000 price bracket, pushing into those sort of upper middle class areas, which I quite like and I think have really good long term upside. If we look at the demand side of the market, so demand appears to be sitting at around 33 days, and that's actually the same as what it was at the start of the year. So we've seen sort of demand remaining strong throughout the year, which is a good thing, and obviously that's, I think, played a role in this median doing what it's done this year. Stock level sitting at 0.3% and inventory at 1 month. So look, that just appears to be the trend throughout regional Queensland, where supply is well and truly under 1 month and inventory levels are around 1 month. So we're in a low supply environment overall. So really, you can take your pick so far from what we've seen and pretty much throw your money into any of these markets, and I think you're going to be doing all right. But obviously, by doing your individual due diligence, you'll be able to sort of pick the ones that are going to outperform. But from what I'm seeing, I'm seeing demand really being strong across all of the hubs we've covered today, and supply also being very, very low. So fundamentally, at a macro level, the right ingredients are still here in regional Queensland. I can't emphasize that enough. It's still a prime place to invest. I don't know, people are looking at sort of Perth, people are looking at Adelaide now, regional New South Wales, regional Victoria, but regional Queensland is still very much hot, and the fundamentals look really good still. And the better yields are here. The better yields are here, the better lifestyle drivers. Investment is through the roof. We've seen David Christofouli come out and create an energy roadmap now, which actually backs coal. So it provides a lot of economic stability for Central Queensland and North Queensland region as well with that new economic roadmap. And it's just going to continue to pump more jobs and infrastructure into these various regional markets. So I see a lot of upside across the board. So if we looked at rents are on the rise here in Townsville as well. It's done 4.6% since January. Vacancy rates are under 1% now, which is good because that's probably the only thing about Townsville where the vacancy rates were a little bit too high, and that's hasn't really allowed rents to rise as quickly or catch up to some of these other markets where rents were a lot stronger. But as you can see, if we look at sort of where it is now to where it was at the start of the year, it's 141 less listings. So we've seen a really contracted rental market here. So now I'm anticipating that median at 517,000. I think in the next 12 to 18 months, that'll be about 600, 620. So we're going to see a lot of rental growth here as supply has really contracted. And that's probably was the only missing ingredient for Townsville, because you could go in and buy relatively affordable property, but then the rents weren't as strong, so your yield wasn't as great as what you could get in some of these other hubs. And obviously, Townsville, you have really a lot more higher outgoings as well per capita or per household, so it can make holding property there difficult. So good to see vacancy rates go down and now rents really go up, and that's going to be a really good thing, I think, for Townsville going forward. So my diagnosis is that house prices are surging right now, and they'll continue to surge, I think, going forward for the end of this year. And obviously first home buyer initiative will also kick in, and I think Townsville will see really good upside as a result of that. So overall, at the fundamental level, demand appears to be still outstripping supply, and then as I elaborated on, that vacancy rate tightening is putting upward pressure on rent. So Townsville, you haven't missed the boat here, guys. Still plenty of wiggle room, I think, for growth. I think Townsville should be around an $800,000 median in the next couple of years, and there's still plenty of upside to be made, I believe, between that $600,000 and $700,000 price point, if you can push into some really nice areas still. All right, finishing off the market update in Cairns, far north Queensland. Let's have a look at what's going on in Cairns. So we can see here that the median house price currently sits at $715,000. So not too dissimilar to what we saw in Mackay and Gladstone, but it's definitely outperforming Townsville, Rockhampton, and Bundaberg. And look, I think similar to Townsville, Cairns being another big regional hub that's a lot bigger than Mackay, Bundaberg, Gladstone, Rockhampton, should be really sitting at around $800,000, $900,000 in the next couple of years. So I believe that median is still very much an affordable median, and Cairns, I believe, still has some really good upside going forward. So we can see here that the year-to-date median has grown by 4.9%, and it's actually up from 681,000 to what it is now at 715. So totaling this year around 34K. So it hasn't really shot the lights out in terms of its growth rate, similar to some of these other areas, but it's a market that is still very much on the move. I'm buying up a storm in Cairns at the moment, and I can tell you this, it's been really hard to buy because supply has been very low, but also demand has been strong. So I'm anticipating like the remainder of this year is going to be hyper competitive, and I think that median house price is going to continue to grow. But yeah, nonetheless, yeah, we bought over 60 properties in Cairns this year, and we found it pretty easy, I think, throughout the year. But then, yeah, what I'm finding in the last sort of 1 to 2 months and right now is that, yeah, there's definitely been an upswing in demand and a sort of a tightening of supply now, even though supply has risen over the last couple of months. So if we look at the data here, we can see here that days on market has averaged around sort of 35 all year. So demand has been relatively strong. We can see here that stock levels are sitting at 0.3% and inventory is sitting at 2 months. So the inventory levels here are interesting because that's at 2 months, whereas majority of the other regions we looked at were at 1 month. So it has a slightly higher inventory pool, and that could be attributed to obviously that median house price sort of not growing as fast as some of these other areas throughout this year. And if we actually look at it, listing volumes has increased 26%. From roughly around 187 listings per month to roughly now 237. So we're actually seeing an increase in supply in Cairns. So that's I think attributed to, if you look at Cairns, supply really tightened up after the cyclone there and after the floods. And I think now that a lot of people have sort of come out the end of that and they've got a bit of family stability, Cairns has got a bit of economic stability post cyclone. I think a lot of them now are sort of weighing up what they're doing, and we're seeing, I think, a lot of supply come to the market as a result of that. And I think that additional supply has just really slowed down that median house price this year. But I think in the next couple of months, that supply will start to dip again, and then demand remaining constant. And I think we're going to see this median house price continue to sort of go up. But that isn't a metric that you have to watch if you are looking to invest in a market like Cairns. Is just keep an eye on how supply levels are tracking. Obviously, you don't want to see another sort of 10-20% increase because I think that'll definitely erode away those gains. We want to start to see the supply start to plateau out again and then really start to decrease. So, yep, Cairns looking pretty good all around. Vacancy rate sitting at 0.5%, and it's been under 1% since January. So on a vacancy rate front, very low supply environment there, and that's obviously had an impact on rents, because if we look at the rents there, it's currently sitting at $602 per week, and that's actually up from 576, so roughly around a 4.5% growth rate. So that low vacancy rate environment is putting upward pressure on rents. So Cairns, a very interesting supply side of the market here, and that's something I think you have to watch. But overall, what we're seeing is the median house price still rising, not as fast as some of the others, or haven't really returned the figures like some of the other markets we looked at today. But nonetheless, supply is still low when you look at it in the grand scheme of things, sitting at 0.3%, and demand is still actually very high when most things are taking on average 35 days to sell. I know the properties that we put under contract in Cairns this week for our clients, like we went to open homes on Saturday, and by Monday they're locked up and under contract, and they're most likely going on the market that earlier that week. So they're on the market for about 7 days before they're under contract. So we're seeing a huge trend like that still emerge, and I think Cairns as well will be a big beneficiary of the first home buyers as well. I think we're going to see a flood of them coming to the market, and I think that southern corridor of Cairns, basically from Bentley Park back through to Gordonvale, throughout Mount Peter, is going to get absolutely smashed towards the start of next year and the back end of next year as well. I think there's going to be some really big numbers coming out of Cairns. But yeah, overall, my diagnosis is still very positive. That median is growing, but it's growing at a much more slower rate, but it's still on the up. Demand appears to be still strong, and inventory levels and the increase in supply is slowing down that growth rate, because right now it just seems to be slightly exceeding that demand rate. But nonetheless, I think that's going to start to turn a corner towards the back end of this year. And then we're seeing the rents go up as well because of that low vacancy environment. So, yep, Cairns, a lot of positives for Cairns. I'm buying up a storm there right now. I see a lot of value, particularly in that South Corridor market, if you can get into the right pockets, and then even some good value around the inner middle ring as well, and then parts of the inner north as well. So, yep, Cairns, still a really good market in my eyes, guys. All right, done and dusted. Regional Queensland market update for October, done and dusted. I hope you got some value out of what was covered there today. Yeah, roughly 40 minutes. I would have loved to sort of wheel that back into around half an hour, but apologies if I rambled on a bit there today. But nonetheless, I hope you got some value out of what was covered today. And again, if you're having difficulty trying to buy in regional Queensland and want further insight into these areas or have any specific questions, feel free to leave a comment in the comment section. I'm happy to circle back and get those answers. But alternatively, if you need help buying in the marketplaces, feel free to give us a call on that number or book us or visit us on that website and send us a web inquiry, and we can try and schedule a call to see if we're able to give you a hand. But other than that, guys, I'll see you on the next video. My name is Troy Bassini, and thank you for tuning in, family. Bye for now.